All right, Derrick. Welcome back to PreMarket Prep. How are you doing this morning
Good morning. I'm doing better as of 5 minutes ago. How about you guys?
with the uh,
What
with
what
the
happened? What
PPI
happened in
report?
5 minutes? The PPI getting you?
Yeah, I'm still net long this market. We call it to be tactically very, very long Monday a week ago into that crash. It obviously played out really, really well.
Mhm.
And as we've come back into what I would describe as more neutral technical territory here for the market, I have been reducing exposure and starting to hedge myself a little bit, but I still am net long. So this light PPI, maybe hopefully just a warm up for tomorrow. We'll see. Obviously, it's helping me this morning, though, just being long still. So.
And that's the thing here, Derek. It is just a warm up for tomorrow. We know the big numbers come in tomorrow at 8:30. How do you position yourself for an unknown economic number? I mean, if the thing comes in hot, everything going to get killed. Is it just like a feel like you think, wow, the market kind of rallying up here, it probably got a pretty good inclination that it's not going to be hot? Can you trade it technically? Do you exit some of these trades before the 8:30 number tomorrow just because of the uncertainty of the number? Talk about the setup into tomorrow's CPI, because we know that's going to be the real mover.
Sure. So I'm a really big believer in the importance of game planning for traders. I think it's one of a few main keys to success in this business is to have good, consistent game plans, and then even more importantly, have the discipline to be able to follow those game plans consistently over time. And that's actually what tricks people up, I think, more than anything, is all of a sudden they see their P&L flashing up or down or whatever, the game plan goes out the window, the discipline goes out the window. So for myself, I combine both day and swing trading. And if I have positions on where I have a specific game plan and there's a big economic number, I understand that's a major variable factor that's going to affect the trade that I have ongoing. But I'm a big, big believer in just stick to the game plan that you have for the trades no matter what. And my game plans are developed primarily based off of technicals in one form or another. So if you were buying last Monday into VIX 65, an extreme downside extension on the downside for the market. I mean, that was that event Monday morning. It was one of the most extended to the downside I've ever seen the market get in my entire career, outside of like the COVID situation where people didn't even know if there was going to be a world the next day. And this was just because of positioning, right? There was no end of the world situation that occurred on Monday. It was just people got caught wrong-footed and it led to a liquidation event. So if you're still long from Monday morning, if you're able to take advantage of that, the SPYs are up, we were at 510 and now we're at 536.50. Market's up massive. So I know that the CPI is going to be a really big event, but I'm not going to let that event just say, okay, I need to just sell all my positions here. I have a game plan where, I've trimmed and trailed on the way up. I put money in my pocket. And as I was just saying, as this market has gotten closer to its like daily 21 EMA, which we're almost touching now this morning, it's been an opportunity to just sell more of those longs, put the cash in my pocket. I've also at the same time initiated a QQQ short and IWM short to begin to hedge myself out.
A little bit of hedging then.
Little bit of hedging at the same time. And I'm just going to follow that game plan throughout tomorrow's move in the same way that I just followed the game plan through the move we just got 5 minutes ago.
And then Derrick, I mean, last Monday when you were buying, what were you specifically trading?
Everything.
You were just buying blindly, just going
everything. When you get a VIX spike like you got, and you get a market event like we just had, correlations go through the roof. So your stock picking is always important, but I would argue that your stock picking is actually less important right now.
100%.
This is get the macro right, get the market right, and the stock picking part of it is easy. A little bit of relative strength here, a little bit of relative weakness there. But we were just in an environment in June and the beginning of July where you had the IWM and the Qs literally trading opposite of each other, sometimes on a 5-minute chart, because the SPX was so tight. There was a huge dispersion trade. There was massive amounts of positive gamma in the SPX, record levels, as a matter of fact. And that created this environment where you could have the Qs and the IWM moving opposite from one another. But then you get a massive VIX spike, you get a bearish market. Obviously, it's not a bear market. We almost got to a full market correction, and correlations just go through the roof. So get the macro right. Recognize on Monday of last week that you need to buy. And honestly, it almost didn't matter what you bought. I'm in 20 something long positions right now. So it was just, all right, I'm buying, I'll buy some of this. I'll buy some of this. This price looks good. Where do I sign up for this price? Let's go.
How about
Derrick,
a hypothetical? I
just want to expand on that before you change the subject here, Joel, because it's such, it was a fantastic point he just made. And I've made this point on the show for a number of years too. When the VIX spikes up, correlations all move together. Stocks all move together. Stock is a stock is a stock. So that's a fantastic point. But I want to ask you, and again, I was doing the same thing on that Monday morning with my trading. I was doing some buying. I bought NVIDIA, and I bought the open on NVIDIA at 92. And then I'm biting my hand a little bit because the trade down to 90 and a half. And I'm like, they're not going to follow through on this. It was about 30 seconds of like, uh-oh. And then they started to come in, and we know Apple and everything. But how do you control risk in that situation? Because so many traders obviously, want to buy the dip, and they want to buy the dip. And we could kind of feel, because both of us been trading professionally for a very long time, that this time it was probably going to work. But what do you do in the situation that it doesn't work?
Sure. So obviously in markets, if you've been trading long enough, anything that can happen will happen. So for me, those events like what we had on Monday, pretty much every single time in my career that I've seen something like that, which has been relatively rare, it's been some of the best short to medium term opportunities ever. But that's not to say that there can't be a situation where one morning I wake up and I think I see this incredible opportunity because it's VIX 65 and then it's VIX 100 and the market's continuing to just drop and drop and drop. And guess what? What was a buying opportunity is potentially a better buying opportunity, but do you even have the ammo left to be able to do it? So risk management is the key to success in the business, and your risk management is found within the game plans that you establish for those trades. So you need to understand, what does your leverage look like? How much sizing you're putting on? Where are you stopping yourself out? So what I said to the team very specifically on Monday morning a week ago was, guys, I really think that this is a buying opportunity, but make sure that you have that signal. Because on the one hand, and it was very similar to early 2022, February 2022, when Russia invaded Ukraine, and we also had a similar huge gap down after 7 days of selling. We were extremely extended to the downside, and just instantly the second the market opened, we got bought up, and you had to buy 9:30 and 30 seconds. This was a similar situation, but you still had to wait for the signal because there was a probability of early panic selling. And if you bought the market the second the market opened and you got 15 to 30 minutes of very heavy panic selling of people who are just, I don't know what's going on, market's freaking out, and they sell it even harder, you could still be in a lot of trouble if you overbought and it pulls down for you for 15, 30 minutes. So I'm coming in really bullish, but I'm still looking for that signal where to buy. And I remember it in my mind's eye so well Monday morning. Almost instantly you had on the first 5-minute bar this quick little downside tail in the Qs. And I was like, all right, that's it. Let's buy versus that low. And it's like, all right, if you get stopped out, then maybe there's a panic selling situation coming in. You just reassess how you can rebuy when the next setup comes in. And in that case, you didn't get stopped out because that was the signal and it worked. And, the low of the day was pretty much 9:30 on the dot on Monday morning. So I think it's also important to know when the market's providing you more opportunity where you should be more aggressive and increase your risk limits in one-off situations. Not every trading day is created equal. Certain days there's a lot of opportunity, and then you have a day like yesterday. Yesterday morning, I wake up, I look at the market, I'm like, we're 2 days ahead of CPI, we're 1 day ahead of PPI, the market's now snapped all the way back to the space between the 8 and 21 EMA. Flip a coin. I don't want to do much yesterday, but Monday a week ago, this is a situation where there is a ton of opportunity and I need to be able to take advantage of that. And you increase your risk limits to be able to go for it, to give yourself that second or third chance on those big opportunity days. And then a day like yesterday, you say, you know what, I got to sit on my hands a little bit more. I'll put a little bit of risk on an earnings trade or something like that to keep myself busy if I think that there's an okay opportunity. But there's no way you can say a day like yesterday has the same amount of opportunity as a day like Monday a week ago.
Yeah, my question goes along right with yours, Dennis, and I'm just giving a hypothetical situation here. In the preparation that you did for this binary event, what was your game plan if it was a hot number and the S&Ps dropped 50 handles? Do you have a priority?
He means today.
Today, right? Yeah. So I did again start to short Qs and IWM ETFs, TQQQ specifically, and the IWM ETF yesterday as part of a game plan where, with where the market is technically on the big picture, I can build into that on the upside into these bounces, which is exactly what I've done this morning. I got heavier on my short IWM and my short TQQQ on the upside as I've lightened up a little bit on those longs, but I still am net long. So I just, and this is actually more based on market technicals than it is a binary event. But that's kind of the game plan. So I'm hedged out a little bit. I'm going to make money if we move higher. But if the number was bad this morning and we traded lower, I've got those shorts on and I have a game plan because I understand the percentage of my portfolio that is short versus the percentage of my portfolio that I'm long. I will be piecing out on the upside into an up move this morning much faster than I'm going to be piecing out of my shorts on the downside if we were to break lower, just based on the fact that the portfolio that I have is net long to kind of minimize the damage, if that makes sense. And then obviously
Derrick, how many trades do you typically hold? Was this a special event that you're buying 20, 30 stocks, or do you typically have in your portfolio and any trading portfolio at any given time 20 or 30 stocks? Just curious, how many trades you hold and how you manage those trades.
Yeah, I'm typically in like 15 to 30 positions at a time.
Okay, quite a few.
I'm at, and I those will be swing positions. That's what I typically am keeping overnight. I'll have some extra positions that I'll typically day trade every day. But all those swing positions have game plans where I actively day trade around the core swing position based on a preset game plan to create cash flow for myself as the big picture itself actually plays out.
Would you ever try and use options in a situation for hedging, or you just feel there's more bang for your buck with like the triple Qs or SQQ?
I do a little bit also. I do both, but I would say I'm probably 95% equities with what I'm doing, straight equities, and 5% options. I'm a prop trader. So, the prop trading space is just a little bit different than the retail space.
Right,
where I don't feel the need to be using options in the same way and have to deal with decay and things like that when I can just call up the people over here at T3 and say, hey, I need you to send me some additional capital to my account because I want to be able to be more hedged or whatever.
Yep.
And for me, that's
if you needed more, if you were getting hedged, wouldn't that reduce your capital exposure?
It still takes up buying power.
Okay.
So, for me, shorting 100 shares of the Qs versus buying 100 shares of the Qs takes up the same amount of buying power out of the account. But the risk team at T3 they can recognize that I'm hedged. And they go, okay, it's not like this guy is just
going all the one way.
Yeah. Long leveraged ETFs. He wants extra capital access so he can hedge himself out. From a risk management perspective, they're going to give me that, 1,000% of the time.
Because Dennis, when we back in the bright days when people were asking for more capital, it usually wasn't a very good sign.
Well, that's when they're just doubling down. But again, and Bright, obviously, I traded with Bright Trading for a long time, 22 years there at prop firm, and everything Derrick is saying makes perfect sense to me too. I mean, the hedged positions, they're always willing to give a lot more capital when you're hedged because, the market tanks, well, your short's going to be making money too. So it makes sense that you're able to get more positions. And then exactly what you were saying with options, people always ask me, well, why don't you trade options? You make more money. Well, it's always props. So it wasn't like I needed more money. It's where you're comfortable. So again, that's the advantage of going to a firm like T3, where if you're undercapitalized, you're coming with a $10,000 account. Well, you probably got to get some options to get some exposure because it's just not enough capital. But you join a firm like T3, they can give you the capital you need. You don't need options as much. So, and then you don't deal with the decay and everything that Derrick was just saying about. I feel like I'm hearing myself speak when you're talking like that. Fantastic points again, Derrick.
Thanks. Yeah, especially when you had a VIX at 65 last week, it's like there was obviously a great trade to try to short the VIX, but if you were buying puts, the decay on that right now was levels.
They get you. They do.
All right, Derrick, we have this QR code up on the screen for your ProDesk virtual trading floor for this week. Do you mind just speaking a little bit about what our viewers will get if they sign up for that? I'll drop the link in the chat as well.
Sure. So the ProDesk virtual trading floor is really what my team of professional traders have started to use since COVID in lieu of the old physical trading floor. So if any of your viewers ever had dreams of actually sitting on a trading floor, this is pretty much the closest that you can get to that without physically being on the floor of the New York Stock Exchange. You get to work with a team of professional traders who are communicating ideas. We're getting real-time news in there, large order option flow, a ton of research every morning. I do a morning meeting for the team every day at 9 a.m., an afternoon meeting for the team every day at 10 after 4. It's just a really great community of professional traders, and we're all feeding off of each other to educate ourselves and hopefully make more money.
Is there much pushing and shoving and fighting for position in the trading room as there is on the trading floor?
No.
There's not like people elbowing you and say, hey, look over there, and then they jump on the broker and trying to get you to miss a trade or anything? There's none of that?
No.
Oh,
A couple quick points on that. First of all, I'm primarily trading things that are so liquid. I don't care how many people are in there. If I bought Apple and everybody bought Apple,
made no difference.
We're not moving $100 billion into and out of Apple. I like to think I'm a big trader, but I'm not big enough to move Apple. That's just not happening. So we have a really collaborative environment, and I get what you're talking about. Those days of the old trading floor pre-COVID, I did that 5 days a week at T3 Trading Group's trading floor for 10 years, and you'd see the fights break out from the traders. It was never really because of positioning. It was because somebody was rude to somebody or somebody was having a bad day. I saw a guy take his chair and lift it over his head and throw it at a trader one time.
Oh gosh.
I'm actually talking about the real trading floor, like the physical trading floor.
Yeah, he was talking about that.
When you have to but I like it. We used to have some pretty good brawls between the brothers, and what were their names? I should have mentioned their names. But they used to have some pretty good fights. But great, Derrick. Glad to always giving us good input on the markets, and calm, cool, and collected. I will never pick a fight with you because what are you? You're like a boxing trader?
I'm retired, but I was a 2-time world champion kickboxer.
Okay.
Don't mess with Derrick.
What about, just let me ask you about one stock here, NIPG, Ninja in Pajamas. Have you seen that stock at all?
No. What's the symbol?
NIPG. It's a
we
new
had the CEO on a while ago.
Yeah.
It's a new IPO. Add it to your list.
Recent IPO. Okay. Looks tight here these last few days. What's the volume look like? Little light.
It's fairly light. Yeah, I don't know. It's not your Apple.
It's not your Apple.
Exactly. You know what? Scratch that. Thanks, Derrick. We love having you. We love having you on.
All right. Thanks, guys.
All right, Derrick.
See you next time.
Enjoy the rest of your Tuesday.
Thanks, Derrick.